is from Andean Precious Metals. We've got founder, executive chairman, and director Alberto Morales.
Hello, everyone. Good morning, and thank you for attending and joining us for this presentation. Andean Precious Metals. First, the legal portion of the presentation, the legal disclaimer, forward-looking statements. So getting down to business, I'll explain a little bit about what our business model and the concept of our company is. Andean Precious Metal is not a traditional mining company. This company, since inception, was formed out of the purchase of an asset in Bolivia from Coeur Mining back in late 2017. For those of you who are familiar or followed Coeur Mining, the asset has been in the public domain for quite some time. It's called the San Bartolome facility. It's the largest commercial oxides plant in Bolivia. As of today, fast forward, we have been profitable every single year. We have a two-pronged growth strategy, which I'll explain. We have a squeaky clean balance sheet, no debts, no royalties, no streams. All of our production is unencumbered, and we have a liquidity pool for acquisitions that it's roughly about $90 million US available for us. Now, what do I mean that San Bart is not a traditional mining company? Usually mining companies, like our predecessor in the previous presentation, start by scoping a deposit, certifying reserves, doing the technical reports, and start building whatever the processing plant is going to be, whether it be a heap leach, whether it be a massive plant, or a commercial sulfide facility for concentrates. When we purchased the asset, we had a very short runway in life of mine. We had less than a year, we had 8 months. But a lot of people thought at the beginning that we had a death wish by buying this asset. How could someone purchase an asset that had literally no life of mine? And I get that. But it just happens that we had a different vision. The vision was we have a facility that it's located in a jurisdiction that it's been traditional. It's the largest silver producer in the world today. It's the 6th largest tin producer in the world as well. It has a tradition for 500 years of being a mining jurisdiction. So what we did here is there are tons of oxides spread on the surrounding areas of where our plant is located. So we started by buying ores, not tolling, buying the ore. And that's our exposure to the metal. We buy the ore, process it, put it in the market, sell it. It's roughly about a 60 to 80 days exposure to the metal, but we do it constantly and on a revolver basis, constantly, all the time. That gives us a cash spread business model. We go for the cash spread. Spot prices goes up, we pay more. That's why some people confuse us as being a high-cost producer. But spot price comes down, we pay less, and we go for the spread. While our other competitors could probably be in the red, we'll still be making cash flows. And as I said, silver, I'm not going to touch too much on the expected growth on the demand and the expected, I would say, decrease in the production because of some of the major mines being on the declining stage. This is our facility. It's literally a 5,500 tons per day mill facility. We have been constantly producing roughly an average of 5 million ounces per year since inception, since it was actually commissioned by Coeur Mining late 2008, early 2009. As I've expressed, we've been profitable every single year by focusing on our cash spread business model. Our growth potential strategy, it's based literally in Bolivia on these 4 bullet points. The first one is we're trying to secure additional ore that it's available in the jurisdiction. An example of that was the press release we just issued last Tuesday before market opened, about a week ago, whereby we purchased 800,000 tons of oxides ore material from another junior miner that was located in Bolivia. It's pretty close to our facility. Average grades we're estimating to be roughly about 230 grams per ton. And we're constantly pursuing that. So we are increasing more and more our purchase programs from smaller communities, what could be cooperatives, miners, individual artisanals, or even family-owned properties. We're also pursuing additional acquisitions in Bolivia because of the liquidity pool that we've got, whether it be on the oxide side or even on the sulfide sides. And we have announced to the market that we're going to start processing our tailings dam for two reasons. It contains good sources of silver, also tin, but we're going to be deferring the tin recovery until better market prices on the tin side. And on the silver side, we have announced that we're investing between $6 and $8 million to start processing our tailings dam. The reason being is that our highest grade ore are hard rocks. So we need to blend it with softer material that's going to come from our tailings dams so that the blending source will allow us to have a better, more efficient processing facility. And this year, the two sites that are the number 12 and number 5, number 12 is the one we've announced last week, the 800,000 tons. And we also announced another one higher grade. It's an average of 350 grams per ton. That it's located in the southern part of the Department of Potosí. That's a 350 gram average facility. If you look at the farthest, that is from our plant number 4, that's the Cachilaguna site. It's in the border with Argentina. That site, it's more than 500 kilometers. We have to pay for the freight. But the grade of the ore has been north of 500 grams, and it contains some smaller gold contents there. That's where we get the minor gold contents that we're also producing. We're roughly pure doré bar producer on the silver side. We're roughly 99 to 99.5% silver, and the rest is gold. That is just a small description of the process on the buying side, the process that we follow in order to go, in general terms, for the smaller, more artisanals or community purchases that we do in country. Roughly, the purchasing process all the way to production goes to 45 to 60 days, depends upon the processing and the batches and the blending that we're doing. And then you have to add another roughly 20 to 25 more days. By the time we export the bullion, the doré bars, we place them into the refineries in the United States here and come up with the COMEX and LBMA certified 1,000 ounce bars, and we place them into the market for liquidity. Our tailing silvers recovery project, the work is going as planned. We anticipate that we will be actually in the middle of next year, getting into production. This will be replacing some of the other softer materials that we get from the alluvial portion of the Cerro Rico, which are included on our reserves in the 43-101. This is exactly what is our life of mine. Currently today, we believe our share price has some hold up because we, on our technical report, do not show a life of mine of more than 2 years. Well, I got this plant with 8 months life of mine. It's been 5 years. We're here talking. And with the 16.2 million ounces in our tailings dam, plus all the other purchases contracts, large scale and smaller scale purchases contracts, we have announced the market that we will be revising and reviewing and revising our technical report, issuing a resource estimate, and we estimate and believe that we're going to be on the plus 5 to 6 years just by what we've got now and what we are securing now. We hope that that will be well received by the market. We're working on it. We're working on the studies, on reviewing our TRs. We have announced it that we have announced the market that we will be announcing this revision on the technical report 43-101, hopefully before year end. On the M&A side, as we expressed before, we have a mandate to purchase in Bolivia because that is our footprint. But also we're looking aggressively in pursuing acquisition outside of Bolivia because we want to diversify the jurisdictional risk. We're looking, as I said, From the get-go, our company was founded on a principle of cash flow, cash flow, and cash flow. We're following that, and we're looking into cash flow producing assets today. We're focusing not just on silver, we're also looking at gold, and we have even been offered some pretty nice copper deposits, but we keep the main guidelines that we have to find a way for these assets to be profitable and generate cash flow, and whether it be at the time of closing of an acquisition or in a near term. We're looking at the footprint of the Americas from the United States to Chile. We have some jurisdictions where we're looking at, US, Mexico, Peru, Chile, Bolivia, as an examples. So we believe that the current market allows us to actually scan different opportunities that has been offered to us. And what we have expressed in the earnings call to the market is that our mandate was to try to execute at least one acquisition in the wider Americas before year end. We're cautiously optimistic and hoping and working hard, not just hoping, that we can reach that stage. And our capital structure. Our capital structure is, as we say, we have a very clean structure, no debt whatsoever, production unencumbered, no streams, no royalties. We have roughly a $90 million liquidity pool that we can immediately get our hands on, which is cash, but receivables, a bullion in our vault, as well as marketable securities that we can convert into cash within 48, 72 hours. We have been purchasing back our shares because we consider that our share price is not reflective of the true value of our company. We've purchased about 3.16 million shares, and we still keep our liquidity pool. Our market capitalization, as you can see, it's below even the cash that we hold in the bank. So the investment thesis, on our humble opinion, I think it's pretty straightforward. In our case, the company's majority owned by insiders. So we have not more just than skin in the game. We have more than our pound of blood and flesh, the Shakespearean way. So that literally tells you that we are being very cautious, and at the same time, we will be trying to do what's right and accretive to the company and our shareholders in general. We have another large shareholder, and the rest is an ETF and the institutions in retail. Our company accounts roughly for about 25% of the city of Potosi's GDP. That is because we are expending a lot of money in the city of Potosi. All of our employees live in the city, subcontractors. We have between direct and indirect, well, there's the chart. We have direct and indirect, roughly about 500 employees, plus the money that's spent on services and things. And the multiplier effect of that, it's been surveyed by some of the universities, local and international. We've done the study, and it really accounts on an economic basis to roughly about 25% of the GDP. And the city of Potosi is a 250,000 people city. So that's how we keep our social license. We try to reinvest, we try to hire local. When we need truckings, we hire local community truckings, et cetera. I mean, there's a lot of our OPEX that gets spent locally. So we believe that we have a solid foundation to go further with a promising future. That is why we have defined our future in 3 words. We're pursuing transformational growth, $90 million on a liquidity pool, no debt, warrants, NSRs, convertible shares, nothing whatsoever that's encumbering neither our capital structure nor our production. As I have expressed before, we've purchased more than 3.1 million shares in the past during the NCIB program that we've got. We're the largest commercial plant in Bolivia. We have an established social license. We intend to grow not just locally, but also internationally. And I guess we have a few minutes for any questions that we'd be happy to address them.
Thanks, Alberto. So we do have time for a couple questions if there's any from the audience. Maybe just a couple general ones for me. You mentioned cautiously optimistic for an M&A deal kind of by the end of the year. Just in terms of sizing, would that be considered small and then maybe another M&A deal in 2024? Or is the plan that this will kind of get a little bit change of focus and then there won't be M&A plans in 2024?
We believe that our liquidity pool and the way that we can leverage our liquidity pool, current market conditions will allow us most likely to do a transaction this year and one more next year. That's what we would be targeting to do. And I use the word cautiously because it's never done until it's done, actually, as everyone knows.
And then just maybe high level, just I don't think everyone is familiar with Bolivia. Can you just talk about the political environment, mining friendliness? I know in the specific area, it's 25% of the GDP, right? So it's obviously very important, but maybe just high level, if you can just talk about the mining culture in Bolivia.
Sure. On the mining culture side, as I expressed, Bolivia, it's been a mining jurisdiction for 500 years. The Cerro Rico actually was discovered by the Spaniards in the colonial times. If you look through history in the early 1600s, the wealth of Potosí was even bigger than the wealth of Paris and London. So it was a very, very progressive city. The money of wealth that was getting out of the Cerro Rico, it's been estimated that over 1 billion ounces, that's what I have read, over 1 billion ounces of silver has been extracted in 500 years just from the Cerro Rico site where we're located, and still going. So there is a culture of miners that has gone traditionally through generations. Now, on the Bolivian side, as you would know, it is a country where when you talk about ESG, the preponderance goes to the S. The country really empowers community, really empowers the indigenous people. It really empowers them in a way that most other jurisdictions does not do it. So it is mostly about taking care of the social portion. That's been our focus because that is the culture in Bolivia. We have gone through 3 presidencies, the Evo Morales presidency, the transition presidency of Janine Áñez, and now through the presidency of Luis Arce. There's going to be elections shortly. We stay apolitical. We like to do our job, do it professionally, do it the best way we can, take care of our social license, and just working on that. That's been our attitude. That's been our DNA. We don't get involved in anything of that. And so far, I have to admit, we've been profitable. We pay our taxes, and we just basically want to continue working. We have, I believe, a good relationship with the authorities because of the importance that this facility has socially. I don't know if that answers your question.
No, that's perfect. If there's no more questions, I think we'll just leave it there. Thanks so much, Alberto.
Thank you, gentlemen. Thank you.